Good morning, everyone. Thank you very much for joining us on Morning Markets from True Potential. Today, we're just going to look back at asset markets from yesterday, particularly focusing in on the sovereign bond markets and what we've been seeing there. We've discussed this over the past couple of days as how yields in the sovereign bond market have been increasing, and that has been influencing other areas of asset markets. And really yesterday was very much a similar theme, but albeit within that, probably the moves in yield were more noticeable yesterday and larger to an extent which did have quite material then reverberations into other areas of asset markets. So if we bring that back to what happened yesterday and what did we see, very much looking across the globe, it was, if we looked at what was happening in European and the UK equity market, we probably didn't get a sense of really what was then happening in the US later in the day. So UK main market was down about 10 basis points for the day. Euro Stoxx 50 was down around 50 basis points in the day. But then as we moved into US and the US market opened up, we started to see some of the activity that we've been discussing in terms of the bond market, in particular the yields there in the US moving out quite materially. And that had significant implications for equity markets yesterday, where we then saw those more growth-orientated areas of equity markets coming under a degree of pressure. So we ended the day with the Nasdaq down about 3.5%, primarily led by those more growth-orientated technology names. And then if we just look at the S&P 500, that was down about 2.4% as well. So quite a broad-based downward movement in markets yesterday, but led by those higher growth areas of the market. So relative outperformance by the more economically sensitive areas, but not sufficient enough to offset that weakness that we were seeing in higher growth names. And really the impetus for that was the move that we saw in sovereign bond yields, and in particular I think that's the speed of the move that we've seen. If we just look back over the course of the month and we think about how sovereign bond yields have evolved, we've seen yields in some instances increase over 50 basis points over the course of the month, and that's quite material from a bond market perspective in terms of the implication for that when we think about the pricing of those bonds. So if we remember, as bond yields rise, the price of the bond is actually falling. So that's been one thing that's been very evident, and that can be really seen in how volatility has picked up. And you'll see that in the chart that's on the screen at the minute. You'll have heard us discuss the VIX index in the past. That's very much focused on the volatility, or the implied volatility, I should say, for equity markets, and in particular the S&P. If we look at what we've got today for the bond market, we've got something called the MOVE index, and that just looks at the implied interest rate volatility. The MOVE index rises as expectations that interest rates will increase. So that is one of the things that we're seeing, and you can see that in the chart. The far right hand side, you'll see the pickup in bond market volatility over the past couple of weeks, and this is a trend that has accelerated really this week. So volatility very much within the bond market at this point in time. And then just to put maybe a little bit of context around those comments, we saw the 10-year in the US increase 15 basis points yesterday, ending the day at around 1.52%. That in and of itself was exacerbated at times. We did get much further out in terms of the yield level over the day. That was driven by an auction for 7-year paper from the US Treasury that didn't go as well as expected, and that just introduced a little bit more volatility into the market, causing yields to move out further. Other sovereign bonds were also in very similar situations. We discussed yesterday what was happening in Australia. Again, overnight we've seen the RBA in Australia intervene a little bit in their sovereign bond market as well. But just looking across the spectrum, UK gilts, Japanese sovereign bonds, German bunds, all coming under similar trends of rising yields at this moment in time. I think the other thing that we discussed yesterday that's really important to keep in front of our minds at this point in time is that rising bond yields are associated with improvement in economic activity. And it was interesting to hear one Fed member yesterday discuss this and highlight really that this is a normal market reaction to that improvement. Some of the data yesterday from the US really also highlighted this level of improvement, thinking about fourth quarter GDP number which came in, revised a little bit higher, but showing that in the fourth quarter the US economy was growing at 4.1% on an annualized basis, something that it will build on as we go through this year as well. If we look at durable goods orders, they increased strongly month on month for January, again supportive of economic activity. And then just finally, I'd touch on the job market, and we looked at initial claims. Initial claims come in quite materially lower than expected, 730,000 versus around 840,000 expected. So a number of indicators as well yesterday that pointed to improving economic activity, and hence why we see some of the reaction in the bond market. I think just to round this out, currency markets yesterday, we've discussed dollar weakness, very much dollar strength yesterday. Natural reaction and move to a more safe haven currency in a time of volatility. That's what we did see yesterday. So the dollar strengthened about 0.6% on a trade weighted basis, and sterling, which has been strong relative to the dollar, came off about 0.8%. Still trading around that $1.40 level, but coming off from the highs that it has been. Those trends continued in Asia overnight. Weaker equity markets and weaker sovereign bond markets as yields move out, albeit we haven't seen the same level of movement that we did see through the past 24 hours. I'll leave it there. Enjoy the weekend. Please do watch out for the podcast, which will be coming out later today. And I'll see you again next week. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.